The Reserve Bank says there's several rate rises in the pipeline as one of the country's biggest lenders warns of falling property prices. The Federal Coalition and Labor stoush over who can best manage the economy, and Japan opens the door slightly to Australian travellers. It's Wednesday, the 18th of May, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Hey, good morning, Michael. Really well done getting the word stoush in. We need more stoushes on Fear and Greed.
It's a great word, isn't it?
It is a great word. And it's exactly between the Coalition and Labor, everything's a stoush. Yep. No one lets anything lie.
Hey, Sean, do you know what today is?
I know where you're going here. It's a very exciting day for us.
It absolutely is. And it is exactly 2 years, almost to the minute, since Fear and Greed was born.
Wow. What a 2 years.
Happy birthday to us, huh? To go from day one back on the 18th of May, 2020, which was we're only just a couple of months into the pandemic then, weren't we? And we started off with, as all podcasts do, 0 downloads effectively. And now we're at the point of getting, 500,000 plus a month. That's what we're predicting for this month. We're looking at 550 or more this month. So that's not too bad in 2 years, is it?
I do remember that first couple of days and going for a walk afterwards and you look at your phone to get your metrics. And as the day went on, thinking dozens of people are listening to us. And the first day we got to 400, I think it was actually a weekend, and going for a walk with my partner, Jackie, and just saying, we got 400 people listening to us today. Yep. I was chuffed. Now, today we'll end up with about 22 or 23,000 downloads. So it's been a pretty good journey, really.
That's not a bad trajectory, is it? And you know what, Sean, can I just take this very quick opportunity just to squeeze in a very quick plug for ourselves, obviously, because that's what we spent the last minute doing. I may as well commercialize it because that audience is big. It is getting bigger. And if you run a business or if you are in a position of wanting to speak directly to those thousands of people listening to Fear and Greed, then jump onto our website, head to fearandgreed.com.au, drop us a line, and we would love to have a chat about how we can help you to reach those listeners, because podcast advertising is growing hugely and it's a fantastically effective medium. So, look, that is the hard sell done. Let's just say happy birthday to Fear and Greed. We would play the song, but we don't want to pay the copyright for it. So we'll just say happy birthday to us and let's move on.
Righto, let's go.
All right, now, as well, after the show today, you have a really good chat today with Joseph Lyons, who is the Managing Director of Xero for Australia and Asia.
Yes, it's a business that really looks after small and medium-sized businesses, and that's what we talk about, Joseph and I. It's a really interesting chat from one of the real success stories on the ASX.
Yeah, no, it's a really good one. We'll have a bit more of a chat about that one later on. But the main story this morning, Sean, is really, we're only, a couple of days out now from the election, and housing has become one of the biggest political debates throughout the campaign, with both parties now having policies to help affordability. But really, no matter what they do, Sean, the Reserve Bank still holds the upper hand. And yesterday, the RBA said it had considered lifting rates by much more last week, much more than the 25 basis point increase that it did deliver.
That's right. Now, housing is centre stage in the election debate, and these sorts of stories don't really do much to help the coalition, to be honest. The board minutes from the Reserve Bank show that rates will continue to rise and, in fact, could have increased by 40 basis points 2 weeks ago rather than the 25 basis points they introduced. That, of course, was the first time rates had risen in more than a decade. The board decided that 25 basis points would demonstrate that the bank was returning to normal operating procedures after the unusual pandemic period. That suggests that 25 basis points is the way to go in the future. The minutes showed that the economy was much stronger than the Reserve Bank had forecast, with inflation materially higher, upward pressure on wages, and the labour market stronger. Importantly, the bank said that housing prices in Australia could also be more sensitive to rising interest rates than assumed. Read between the lines on that one. The Reserve Bank is saying house prices could fall more than normal.
And on that topic, Sean, ANZ has cut its outlook for housing price growth and expects prices to fall by 3% this year, 8% next year across the country.
Yes, it's a reversal of much more optimistic forecasts the bank held not so long ago. ANZ expects the cash rate to shift from its current level of 0.35% to 2.35% by the middle of next year. And they're not particularly pessimistic among all the forecasters out there either. Many think that the cash rate will go much higher. That will hit home buyers and house prices. Not helping is plenty of supply in the market at the moment and limited affordability, given the big price rises of last year. House prices are already on the way down in Sydney and Melbourne, the two largest markets, and even the hotspots of Brisbane and Adelaide are showing some signs of cooling. ANZ reckons Sydney will be hit hardest, with prices down 7% this year and 8% next year. That's a big, big fall. Melbourne will be 5% and 6% respectively. Brisbane, Adelaide and Perth are all expected to rise this year before falling next year.
All right, moving on. How did local markets fare yesterday, Sean?
Well, the S&P ASX 200 finished yesterday's session 0.3% higher at 7,113 points, helped by a rally across resource stocks. It's just been inching higher over the past few sessions, the boss. The big banks did reasonably well yesterday, as did the utility companies. Healthcare, industrials and real estate stocks were the burst performers. Another jump in oil prices boosted the energy sector. Beach Energy added more than 6%. Whitehaven Coal was up about the same, and both Woodside and Santos rose 2%. A rebound in iron ore prices helped mineral resources at 5.7%. Champion Iron was up about 3.7%, and both Fortescue Metals and Rio Tinto rose around 2%. Brambles was the worst performer yesterday, down 7.6%, more of that shortly. PointsBet Holdings, REA Group and Magellan Financial were all off around 4.5%.
And Sean, just quickly, what about the Aussie dollar?
It pushed back above 70 US cents yesterday. That's good news. The minutes from the Reserve Bank helped, undoubtedly. Oil and gold prices were also higher, Michael.
All right. We'll be back in a moment with the rest of the day's business news. All right, Sean, we're just 3 days now until polling day, and the two leaders, Scott Morrison and Anthony Albanese, are making last-minute fly-throughs of marginal seats. And it seems like they are increasingly trying to show themselves as being forward-thinking.
Yeah, it's like someone hit a switch over the last weekend and said, you guys have actually got to show a vision as opposed to complaining about each other.
Yeah, and they're both doing it.
They're both doing it, on the economy, on security, on cost of living, on housing, on aged care. They're both becoming much more expansive about what they think their vision is.
It's actually really nice to see, isn't it? It's actually,
totally.
I think it's kind of what would have been nice to see probably about a month ago, because it really kind of tells us where we're going rather than just attacking each other.
Yeah, absolutely. Look, the coalition released its policy costings yesterday. It featured a $1 billion improvement to the bottom line since the budget, which was passed down in March. Now, the coalition was criticised for including a 0.5% efficiency dividend from the public sector. That's all about cutting waste in the public sector and helps boost your bottom line. Everyone does it. Can't be too critical of that. Anthony Albanese came under pressure ahead of the release of Labor's budget costings. They're due out tomorrow. All day yesterday, he was asked whether deficits would be higher under Labor. He didn't really want to answer, and by the end of the day, he was a bit grumpy about that particular line of questioning. The point of costings, of course, is that each party think they can look more responsible managing the economy. So if one comes out with a much worse deficit, the politicians think that voters will move on that. Mr. Albanese was also asked what his legacy would be if elected Prime Minister. He said acting on climate, and he vowed to reinvigorate the enterprise bargaining system. A couple of other interesting points from yesterday. Former Prime Minister John Howard said the election was too hard to call, and he pleaded with small L Liberal voters, that's moderate Liberal voters, to stick with the government. And former Liberal Foreign Minister Julie Bishop said voters are disillusioned just days out from the federal election, with neither major party pursuing big political ideas. I certainly think how the independents perform on Saturday is going to be one of the best storylines of the election.
All right. Now, Sean, away from the election, investors talk about companies with pricing power in an inflationary environment. Building Products Group James Hardie has plenty, but pricing power is one of those terms that we hear a lot about. Can we start with a bit of a kind of a definition of what it means?
Well, it's really as simple as the ability to put up prices. So James Hardie said it will push through another round of price rises in its North American business next month to tackle inflation. It means in a 6-month period, James Hardie's been able to put up its own prices by about 9% and still sell stuff. That's what pricing power is. Put your prices up, people keep buying just as much of it. James Hardie also said renovation backlogs are running at double the normal levels in North America and that rising interest rates is having no effect on demand yet. James Hardie does a lot of work in the repair and remodelling sector of construction, and that's booming in the US at the moment. The group reported a 75% increase in net profit to $660 million for the 12 months ended March 31. Now, the group is still looking for a CEO after boss Jack Trong was forced to step down after an investigation into bullying claims earlier in the year. Its share price fell yesterday by more than 3%.
All right. Now, Sean, what a difference a day makes. Yesterday, it was all about private equity group CVC making a pretty big bid for Brambles. Today, the bid is over.
Before it even began, Michael.
Yeah, pretty much.
And Brambles' share price fell 7.5% as a result. The transport and logistics giant said CVC had decided it won't be pursuing its buyout proposal that was supposed to be worth around $20 billion. Of course, that sent Brambles' share price up 11% on Monday. Anyway, CVC won't be pursuing the buyout proposal. Talks have now ended. CVC cited financial market volatility as a reason it decided to drop its attempts to make a serious offer.
All right. Now, tomorrow is a pretty important day, isn't it, for Woodside and BHP? The boss of Woodside Petroleum, Meg O'Neill, has suggested she's confident about the shareholder vote tomorrow over the proposed $63 billion merger with BHP Petroleum.
Yes, Ms O'Neill tried to steer away from commenting directly, but told the Australian Petroleum Production and Exploration Association conference in Brisbane that the company is feeling good about the deal. She said the new company, assuming the vote passes, will hold a big stake in energy security in Australia and North America. Now, the vote needs just 50% support and it should pass. At the same conference, the chair of APIA, Ian Davies, said record oil and gas prices are no good for anyone. He said increasing the supply of gas was important to put downward pressure on prices.
All right. Now, we mentioned the housing market in the main story, Sean, and Commonwealth Bank was out yesterday offering goodies to home borrowers.
Yeah, sort of. The country's largest home lender has launched its new digital home loan, Unloan, which provides a single low-cost interest rate. Owner-occupiers who refinance to Unloan will pay a variable interest rate of 2.14% and investors will pay 2.44%. Of course, Michael, this is just days after the boss of Commonwealth Bank, Matt Comyn, said there was too much competition in the marketplace and some lenders would find it unsustainable. A little ironic, he now comes out with a very competitive offering. Certainly, Commonwealth Bank is putting competition into the sector. Michael, the bank also announced the launch of Kit, a money app and digital information tool for kids aimed at helping them learn about money, how to save, how to budget, and how to manage their spending. Adults too, hopefully. And Commonwealth Bank also launched Yellow, a new recognition program that rewards customers with personalised benefits and offers.
Is Kit the new Dolomites, Sean?
Oh, perhaps it is. I always thought of Kit as the car.
Yeah, I see. Okay, now I think we are at risk of aging ourselves, or in particular you, with that kind of comment. But Dolomites obviously finished up in the last couple of years, and so maybe this is the new offering to try and help educate kids.
Not a passbook, more an app.
Yeah.
I think that sounds very 2022.
Oh, it certainly does. Now, Sean, IGO Limited has won support for its $1.26 billion bid for nickel producer Western Areas, with a proxy advisor telling clients to vote in favour of a deal that was called not fair but reasonable by an independent expert.
IGO raised its offer by 15% to $3.87 for each Western Areas share back in April, but that improved price was still below the $4.04 to $5.23 range that KPMG declared to be fair value in its independent expert report. One of the two biggest proxy advisory firms, Institutional Shareholder Services, said the gap between the KPMG valuation, about $4.70, $4.80, and IGO's offer, $3.87, meant it had some concern about recommending Western Areas shareholders accept the IGO offer at a meeting to be held on June 1. But ISS pointed to the fact that close to 25% of KPMG's valuation reflected geology that was not actually in Western Areas' mine production plans. IGO share price rose 3% yesterday and Western Areas was up slightly.
All right, a couple of quick, smaller stories for you, Sean. Consumer confidence fell 1.3% last week.
According to the ANZ Roy Morgan poll, confidence is now at its lowest level since mid-August 2020 when COVID was taking hold.
All right, and shares in Havilah Resources jumped 85% yesterday after it signed a binding term sheet with Oz Minerals.
Yes, Havilah will potentially sell its Kalkaroo copper gold project for over $200 million. Oz Minerals has about 18 months to decide whether it will acquire the project.
Okay, moving on to overseas news. The unemployment rate in the UK has fallen to 3.7%.
Yes, that's the lowest level since 1974, for the first time since records began being kept. In the UK, there are fewer unemployed, that's 1.257 million unemployed, than job vacancies. All the numbers in the report were good. There was a record number of people moving from unemployment to employment, from economic inactivity to employment, but real wage growth was 2% lower. Now that's on the back of the big jump in inflation recently.
Now, how about this one, Sean? It's not a bad time to be working at Microsoft. Microsoft plans to nearly double its budget for employee salary increases and boost the range of stock compensation it gives some workers by at least 25%. Not bad.
Yes, it's part of its efforts to retain staff and help people cope with inflation. The move will mainly affect early to mid-career employees, Microsoft said. That's according to Bloomberg. The battle for staff is ferocious at the moment, particularly in the tech sector. It's not only the big guys like Microsoft, Amazon, Google and Facebook, which of course is owned by Meta Platforms. It's startups as well. Still, anyone at Microsoft can hope for good news.
Now, North Korea supposedly hadn't been affected by COVID, but that has certainly changed now in the last month, hasn't it?
It sure has. The world hasn't had much information out on North Korea's COVID issues. Though a few days back, it reported what it said was its first COVID case. That was always unlikely. No one really believed it. Its leader, Kim Jong-un, has now mobilised the military to help fight one of the biggest crises he's faced in his decade as leader, as suspected COVID-19 cases reached almost 1.5 million in less than a month.
Wow.
Pyongyang reported almost 270,000 new fever cases and 6 deaths nationwide in just 24 hours on Monday.
All right, now I mentioned this one at the top of the show, Sean. Japan is finally opening the door to travellers, but it's only just slightly ajar, the door.
Yes, that's well put. Japan will allow in small groups of tourists on package tours this month on an experimental basis, a first step in welcoming back the foreign travellers who have been shut out for most of the coronavirus pandemic. Travellers from the US, Australia, Thailand and Singapore who have received 3 vaccination shots and have medical insurance will be allowed in as small groups on package tours, according to the Japanese tourism agencies. Groups will need preset itineraries and must be accompanied by travel agency staff. Nowhere near back to normal, but at least it's a step in the right direction.
Yeah, it's a small step, but it is progress. Now, Sean, up next is a Fear and Greed daily interview, and today you're speaking to Joseph Lyons, the Managing Director of Xero for Australia and Asia.
That's right. We talk all about what Xero is doing with small and medium-sized businesses and very much how during COVID and beyond, businesses have adopted the way they work or adopted technology to change the way they work. It's an interesting hands-on look at how small businesses operate in the technology world.
Yeah, and it's really looking at the fact that they are predicting a massive, massive boom in the number of small businesses and the economic contribution that they're going to be making. So it's a really interesting conversation, but an interesting time to be having the chat as well. So it's well worth a listen. That's coming up next on the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 18th of May, 2022, Fear and Greed's second birthday. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.